investing not only helps protect the purchasing power of your money against inflation, but goes a long way in creating wealth that helps you achieve your financial goals. Today, we're going to talk about one such investment category, thematic funds via passive investing. This is a series brought to you by BQ Prime in association with Mirae Asset Mutual Fund. I have with me Siddharth Srivastava, the head of ETF Products with Mirae Asset Investment Managers India Pvt Ltd. Siddharth, thank you so much for joining us today.
Thank you, Mabina.
To start with, tell us a little bit about thematic investing. How is it different from traditional investing, and what's causing this global growth in popularity?
So, thematic investments focuses on identifying long-term trends and then seeks to capitalize on it by investing in companies which are participating in those trends. So, unlike a large cap fund which focuses on size of the company, or a sector fund which focuses on a certain sector, themes focuses on these ideas or trends which are emerging. Now, globally, what has happened is a lot of new trends have emerged on the technology side and also on the consumption side. And these are very fascinating changes which are disrupting industries, and investors want to participate in it because it is very important when it comes to thematic investing that you enter at the right time. You are entering at the early phase so that you can get that benefit of identifying a theme early, and when the company performs, because it does so well and it captures the new trend, and you get that benefit of increase in the company's value ultimately, right? That is what you are seeking, that the stock price should increase. And that is why thematic investing has grown so much in last 3 years, because these trends are emerging left, right and center in healthcare, in technology, even on the consumption side. So much so that by the end of 2021, AUM of thematic funds in 3 years, so that is significant number of uptick we are seeing not only in the AUM but even in the number of funds which are being launched.
So you mentioned a few themes. Could you share with us which themes are gaining in popularity?
So thematic investing has been there since quite a while. So we all know about consumption, which is one of the most talked about theme in last few decades, and ESG also, which has been talked so much in last couple of decades. But now new themes which are being talked about, as I mentioned, EVs, which are changing the way cars are being manufactured. In automobile industry, there's entire supply chain which is addressing this new product type, and then you can talk about. The reason why these themes are being talked about more and why these new themes are emerging and being so much sorts of included in investors' portfolio is a lot of these themes are long-term in nature. That is why we are seeing that there's so much of a surge in these new thematic products.
You mentioned EV, and I think that's something that almost every Indian car maker seems to be talking about. So tell us, what's the global trend that you've seen in this EV theme?
So EV is one theme which is being talked about so much because it is so evident, right? In India, you see a green number plate and you associate that car with an electric car. And since we are seeing so many electric vehicles on road, we are seeing that change happening from internal combustion engine vehicles towards electric vehicles. And that is why while there are a lot of other themes like cloud computing, cybersecurity, which are having an equal impact on the industries and how things are working on the technology side, people talk about EV more. But that's a good thing, right? Because that's a very interesting space to be in. For example, if you look in terms of car sales share, it was just 2.2% in 2018. It grew up to almost 8.6% in 2021, just 3 years. In 2021, 6.5 million vehicles were sold. And by the end of this decade, the expectations are it will be somewhere in the range of 30 to 50 million. And people are seeing that change happening, right? So what from an investment point of view is intriguing, not only the asset managers, but also the investors, is the entire ecosystem of EV which is being created. So it is not just automobile manufacturers in which people are interested in, like you mentioned, but also the companies which produce batteries for EVs, companies which mines lithium metal, which is used in creation of those batteries, or creates chemical which is used in the battery manufacturing, and the tech companies also. So there's a huge ecosystem which is there for EVs. And in thematic investing, either you can go broad and invest in an entire ecosystem, even in the ancillary industries which are supporting those themes, or you can be very specific. So in EV, there are funds which invest in entire ecosystem, from car manufacturer to the chemical company to the battery manufacturer. But there are specific funds also which just invest in, let's say, companies which are in lithium mining or battery manufacturing, and that is what is catching a lot of attention among investors right now. I think global AUM is roughly around in the range of $20 to $30 billion right now.
So obviously for Indians, there are certain restrictions on global investments. So for a theme like EV, just as an example, how can Indians take exposure in this kind of a theme?
Yeah, so very right. Early this year, SEBI basically restricted AMCs to invest in any foreign securities, because the overall industry limit of $7 billion was about to be breached. But since then, SEBI has allowed few mutual fund schemes to open up, because if there has been a redemption in the fund and a room has been created, SEBI has basically allowed the fund to refill that buffer or room. And then there are few schemes which have opened up. But there is another category, which is a fund of fund which invests in overseas ETF, which is still open, because there is a separate $1 billion limit which applies to this segment of schemes. So there are a lot of fund which invest in overseas ETFs/funds which are still open. So people can use that route. Additionally, LRS is also one route which people can use to buy overseas funds or ETFs or invest in securities directly.
So now that we have our options, this leads me to my next question. Why do you think Indians and investors should consider international thematic investing?
So first of all, investors should know that thematic investing is not a substitute for your core portfolio, right? A core portfolio typically should form part using large cap products, right? If you're talking about domestic, then large cap, etc. If you're talking about internationally, then maybe broader based products like NASDAQ or S&P 500 top 50 or S&P 500 or some broader index, right? Thematic products will serve purpose on the satellite portfolio, right? So first is that don't jump onto thematic product as your first product for international exposure. That should be a second step or a third step. And secondly, there are a lot of changes which are happening globally, right? And these themes are not accessible in Indian markets. If I think about companies which are there in cybersecurity or these global funds which you can evaluate to take exposure in those themes.
Let's talk about passive investments. Why do you think passive products are a better way to take exposure to the entire thematic investing strategy?
So one thing which is very particular to a thematic investing is that if you're talking about a large cap fund, let's say, then your majority of your portfolio will be made up of companies which are belonging to large cap segment, right? Thematic products on the other side can be constructed in multiple ways. As I mentioned, for EVs, right? If I want to take a broader exposure, I can invest in an entire ecosystem. If I want to take a more concentrated exposure, I can just invest in a pure play companies which are participating in XYZ theme, right? I can also take a call to invest in ancillary companies, right? For example, let me take a very simple example. In case of consumption theme, you will find funds which invest in banks also. You'll find funds which invest in NBFCs and fintech also, apart from consumer good companies. So depending on the investment objective and the asset manager view, your underlying portfolio can differ a lot. And because of which the risk as well as return profile of the fund can change significantly. Now what passive does is, A passive product is created based on a rule-based methodology, and the portfolio is based on a certain rule. So investors always aware kind of that what sort of sector exposure, what sort of country exposure, what sort of company exposure the ETF or an index fund might have. And in case of thematic investment, probably people will prefer that. If I know that if I'm taking exposure in cybersecurity, I'm only taking exposure in pure play companies or companies which are assisting cybersecurity companies to achieve that goal, I'll be more happy to be aware about all those nuances. So passive brings clarity and transparency on the table when it comes to thematic investments. Apart from that, typically your passive products comes at a lower cost, and there's no active manager risk involved when it comes to passive products.
Let's talk about the risk associated with thematic funds. What's the level of risk, and also what should be the risk profile of the investor who considers investing in thematic funds?
I think that's a great question, because it's important to know that while people are interested in a lot of themes, they come with their own set of risk, right? People are keen on AI and EVs because they sound fancy also, and they are doing so well also, but risk doesn't go away just because a theme is doing well or may do well, right? And as I mentioned earlier, first of all, it is important to understand what sort of exposure a concerned thematic fund will bring to your portfolio. Whether a concerned thematic product is concentrated, or is it diversified? Is it only investing in pure play companies, or is it more wider in terms of companies it is going to have under its umbrella? So first of all, it is important to understand what sort of product construct the fund has, right? And secondly, it is important to know that that if you're investing in a global thematic fund, you'll have a different country exposure. You might have a multiple currency exposure. You'll have exposure to multiple sectors, etc. And all those typically make a thematic product more risky than your let's say a large cap or a broader market product. And that is what is very important to first of all realize. And secondly, in themes, and when it comes to investment in themes, timing is very important, that you are entering at the right time. You should be aware whether the run-up has already happened in a concerned theme, and if you're entering too late, probably most of the price movement has already happened and you may not see much of wealth creation henceforth. So it is important to enter at the right time. It is important to stay in a theme for a longer duration till you have seen theme saturate in a way, and most of the run-up happened. So it is important to enter at the right time and also probably exit when a theme has saturated to an extent. And also, like you mentioned, and like we earlier mentioned, that it is important to differentiate that this is not a substitute for your core allocation. So your allocation should also be dependent on your risk profile. If you are able to take risk, even then probably you shouldn't go too overboard in taking exposure to a particular theme.
Which brings me to my next question, that's constructing a portfolio. How can investors construct a portfolio and include thematic funds? What should be the allocation according to you?
So since we are talking about international funds, the first step should always be to invest in a broader market portfolio, like a large cap exposure if you're talking about US market, or if you're talking about other market also. Just think about broader market portfolios, funds, and that should be your first step. Second step can be themes, and if you're talking about themes on an aggregate, I think 5 to 10% exposure in an overall portfolio should be ideal, but that depends upon the kind of risk profile you have. If from a risk profile point of view, you are only investing in Indian debt products and Indian equity, your first step shouldn't be a thematic product for foreign exposure. It should be, as I mentioned, gradual. First invest in a broader portfolio for international market, and then if your risk profile allows, then invest in a thematic product, and roughly in the range of 5 to 10% on an aggregate basis.
Well, a very enlightening and informative conversation. Thank you so much, Siddharth, for joining us.
Thank you, Mubina.
Well, that was Siddharth Srivastava talking about the risk and the opportunities in passive investing and thematic funds. This was our investor education series. Thank you for tuning in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.